Welcome to Market News. I am your host, and today is Wednesday, August 5th, 2026. Good morning. Wall Street is on a tear. The S&P 500, the Dow Jones, and the Nasdaq all just pushed toward fresh record highs, and the narrative this morning is as much about who wins and who does not as it is about the broad green. We have a record-setting rally, a stunning Disney report, an AI chip divergence that reads like a cautionary tale, a space company that beat expectations and still got sold off, and a legal decision that may reshape the entire AI platform landscape. Let us walk through it. Our top-line story is the rally itself. The S&P 500, the Dow, and the Nasdaq Composite are all at or near new highs. The drivers are familiar but potent. Optimism around a potential Mideast diplomatic deal, a solid wave of strong earnings from companies defying macro uncertainty and raising guidance, and a broader market mood that has been remarkably constructive. Even with some notable laggards in the mix, the benchmarks kept climbing. Now, the earnings season delivered hard today. The undisputed star is Disney. The company beat Q3 estimates in a way that has the market taking notice. Streaming profit doubled quarter over quarter. That is not a marginal improvement, that is a fundamental shift. Theme parks continued to be the growth engine, bolstered by Toy Story 5, carrying results even when content revenue came in slightly soft. And here is the real story. A new CEO iteration is executing reforms that predecessor Bob Iger could not fully realize. Bank of America has even opened the door for proposals for a 2027 art conservation project, which is a side note, but it tells you about the breadth of operational momentum. Disney shares rose on the results despite the slight revenue shortfall. The takeaway from the street is that the streaming turnaround is no longer a promise. It is gaining real weight. Eli Lilly also delivered a record-breaking Q2, fueled primarily by its GLP-1 drugs. The analysis going around is that while the current story is about weight loss drugs and pharmaceuticals, the future narrative for Eli Lilly involves AI shaping growth in meaningful ways. That crossover between biotech and AI is becoming an increasingly common thread. Let us talk about the AI infrastructure trade because that is where the day's sharpest divergence landed. Arista Networks surged after earnings that basically confirmed what a lot of investors thought. The depth of AI infrastructure demand is real and it is not slowing. Microsoft, Meta, and Alphabet came up as key beneficiaries, which tells you the demand spine is broad. And on the chip side, the story is dominated by NVIDIA. NVIDIA gained roughly 4%, buoyed by a positive read on its partnership with SpaceX. The stock is clearly the main beneficiary as the AI power infrastructure story expands outward into space, satellite, and power systems. Now here is the contrast that you need to understand about this market. AMD dropped roughly 6% despite reporting a record quarter. The same quarter, record revenue, record top line, and the market sold the stock anyway. The headline response to AMD's results underscored why it is so difficult competing in second place in the AI chip race. When you are NVIDIA, beats and raises come with a premium. When you are everyone else, even record results can be sold off in real time. Micron flipped the script the other way. Shares rose after Elon Musk flagged surging memory prices. Another read-through that AI demand is translating into real pricing power up and down the supply chain. The broader SOX index was lifted by this momentum, and Intel's returns were described by one analyst as diversified in direction but not in magnitude. That is, some moves are up, some are down, but none are meaningfully close to the upside that NVIDIA or Micron are seeing. Broadcom and the semiconductor space at large got a lift from this sector-wide energy, but the message was clear: the bar for semiconductor winners has never been higher. And speaking of Elon Musk and space, let us get to what might be the most unusual story of the day: SpaceX. SpaceX delivered its first earnings report since going public and beat expectations. That should be a stock mover. But the market reaction? Not so much. The stock fell sharply. Why? There are a few layers here. First, the heavy capital expenditure theme. SpaceX is making commitments that have investors spooked. And that same capex intensity shows up in Tesla's results as well. Tesla and SpaceX, on paper completely different businesses, are merging in practice through their AI power infrastructure footprint. Both are burning serious capital. Second, the 24/7 Wall Street headline captured sentiment neatly. SpaceX is tumbling hard this morning, and it could fall a lot more tomorrow. So despite the earnings beat, the capex intensity and the forward-looking risk have investors staying cautious. NVIDIA, of course, was framed by many outlets as the real winner from the SpaceX earnings release, which is a reminder of how the market chains these stocks together now. On the crypto side, Bitcoin, Ethereum, and the Bitwise Bitcoin ETF, that is IBIT, were all flagged as technically oversold. The technical analysis gave ETH a bullish score of 0.85 for oversold territory, IBIT at 0.74, and BTC also at 0.74. No bearish signals were identified across the entire crypto sweep. That suggests a potential bounce setup if the broader market stays constructive. Separately, Circle Internet Group, the folks behind the USD stablecoin, posted mixed financial results. So the crypto environment is giving us both oversold bounce signals and mixed fundamental reads at the same time. Among the other notable moves, McDonald's second quarter net income climbed 5% to $2.36 billion. A steady, reliable number that investors like because it is exactly what you expect from McDonald's. Apple saw its purchase commitments jump 28%, with Bank of America noting what they describe as an iPhone ramp ahead, another indicator that the next iPhone cycle could be particularly strong. Microsoft received a price target lift from Tigris Financial to $690 from $680, the buy rating kept intact. And Blackstone was reported to be pitching a $36 billion debt deal to fund Anthropic's AI chip build-out. That number is enormous, and it tells you just how much capital the entire industry is willing to commit to this space. Now, there is also a significant legal story that deserves attention. A U.S. court overturned an Amazon injunction against Perplexity AI. What does that mean? The Ninth Circuit's reasoning, often referred to in market coverage as the browser analogy, essentially created a liability vacuum for AI platforms. Major platforms like Amazon and Apple are navigating new ground, and without a clear legal framework, the antitrust landscape facing big tech is now the subject of intense debate. This matters because it opens the door for ongoing litigation and sets precedent for how AI platforms are treated moving forward. Finally, a handful of smaller corporate governance and commodities stories that are worth a quick mention. Former Siboney-Stillwater CEO Neil Froman was named chairman of Super Control Materials. Talcott launched West Grove Re with Goldman Sachs, a reinsurance play that is niche but interesting in the current rate environment. Needham lifted its bid-dear price target to $22 after a $4.7 billion title lease was announced. Goldfields saw its fair value fall after analysts cut targets. And the Nasdaq, S&P 500, and Dow all built on their record highs, with hopes for an Iran deal helping offset the SpaceX and AMD drag. So let me pull this together for you. What are the 3 takeaways from today? Number 1. The broad market is extending record highs on the back of strong earnings, Disney turning the corner on streaming, Eli Lilly's GLP-1 dominance, companies raising guidance and defying macro uncertainty. The rally is not just speculation. Number 2. The AI infrastructure trade is consolidating its winners with brutal clarity. NVIDIA is the beneficiary. AMD's decline despite a record quarter is a cautionary tale about the cost of second place. And the capex story is evolving from just chips to power, to space, to memory. Blackstone's $36 billion pitch for Anthropic is not an isolated deal, it is the new normal. Number 3. There are real risks on the horizon. SpaceX, despite an earnings beat, is tumbling because of capex intensity. The legal uncertainty around AI platforms could reshape the competitive landscape. And crypto, while showing oversold bounce signals, still has mixed fundamentals. That is your market news for August 5th, 2026. The markets are at records. The AI story is deepening across semiconductors, networks, space, and biotech, and there are a lot of moving parts. Stay sharp out there. Thanks for listening.